Hey, what's up, my YouTube fam? I'm back. This is Larry with the Best Credit Repair channel, and today we're going to be talking about two value stocks that I think will be great for your portfolio. But first, I want to say thank you for my new subscribers coming out to the channel. I appreciate you. We're going to continue to grow this channel, and we're going to continue to build and continue to bring you good information that you can use into growing your wealth, improving your credit. I definitely wanted to add more investment videos because I believe that both are linked. You definitely have to be working to improve your credit, to create and understand how to leverage your credit and use it also to continue to grow your wealth, which is in business. Or just grow financially. Investing is always needed. It is a cushion. It is something that prepares you for your retirement. So at one point, if you're ready to retire, don't want to work, you can still live the same lifestyle that you live while you even working, or even better because you've been investing in yourself. It could also be used as the platform. You ran into some hard times, but because you've been investing in yourself, you were able to get yourself out of those situations without destroying your credit, right? So I think they're very important. I'm a big investor. I don't talk enough about this channel, but I know I've been wanting to add it to this channel. That's why when I first started this channel, that's why that was made. That's up behind me. Our mission is to educate, to build, to grow, so we can invest to 1,000,000. It's all about investing. It's all about taking care of your credit. It's all about growth. So like, subscribe to the channel. We're going to continue to grow, and I appreciate y'all. So let's get into it. So first, we're going to be talking about what is a value stock. A lot of people, you're going to hear value stock, you're going to hear growth stocks. What are the differences between the two? I'm going to tell you a little bit. I'm going to read a little bit about the definition so you can understand it. And then we're going through some differences of the two, why one is considered a value stock and one's considered a growth stock. So the difference between a growth and a value stock is the value stock are companies investors think are undervalued, meaning the stock price is cheaper than what they think the company is actually worth. A growth stock are companies that investors think would deliver better than average returns, meaning they're expecting that stock to continue to grow, right? What are some of the other differences that you need to look at? Let's talk about value stock, growth stocks. First, let's talk about the price. On a value stock, they consider that price undervalued, cheaper than what the company is worth. Growth stock currently think it's currently undervalued too. But where they start to separate is the PE ratio. For a value stock, generally the PE ratio is low. In growth stocks, the above average PE ratio, so they're usually high. For example, Tesla used to always have this high PE ratio because they were just like growing crazy. I remember the COVID year where Tesla was like $200 and something, and by the summer it was $800-900 a share, like growth stock. Dividends, generally high dividend yields on value stocks. But if you look at growth stocks, they're typically very low yield dividend yields or no dividends at all. And then the risk. So for a value stock, it may appreciate as much. It may not appreciate as much as expected, meaning it may not drop these drastic drops. But value stocks, volatility. It could be up, it could be down, it could be up, it could be down. It's a lot of volatility in those stocks. So those are some of the main things that separate a value stock from a growth stock. But now we're going to be talking about these two value stocks that I think are great, that I am investing in. And I love the dividend yield. I love the price of the stock. Definitely could be buying. I love the industry of these stocks. Let's get into it. Ticker number 1 is MPLX. Stock price as closing on The Friday was $33.82. So what brings me to these stocks? So as my brokerage is Fidelity, I'm always looking at stocks and see. I seen that for the MPLX, I was reading a couple articles and I seen that they were very bullish on the stocks, which caused me to dig a little deeper. Now, when I'm talking about these stocks, what I did mention is very bad. I am not a financial advisor. This is my opinion on stocks that I'm investing in, that I'm just passing this information over to you. Do your research. Is it a part of your portfolio, your investment strategy? All I'm doing is giving you information. There are, I think, 19,000 stocks out there. I'm just giving you my opinion on the ones that I'm looking at, that I'm investing in, and hopefully it meets something. It will meet what your investment strategy is. So MPLX is in the oil, gas storage, and transportation industry. Their market cap is $33.93 billion. Their total debt is $20.5 billion. They have a cash revenue of $101 million. Their total revenue, when people say total revenue, is after you pay all the bills, right? It's $11.2 billion. Another thing I always look at, what is the institutional investment ownership, which is around 23.14%. But so what are the bigger things that draw me? Things I'm looking at is earnings per share. Every quarter, they have the earning calls. What is the earnings per share? So they have increased their earnings per share by 83 cents from the last quarter two. Now they're up at $1.36, right? So 83 cents increase. Their dividend yield increased to 9.24, which was an increase of 0.22%. Their old dividend yield was 9.02 in the previous quarter. Their PE ratio is 8.88. Their year-over-year growth, meaning what the same time last year to now, how much have they grown? They've grown 15.47%. And some of the biggest things for me, what we call eye openers. The dividend yield is considered to be the safest, meaning they have no analyst is out there thinking that this company is going to be cutting their dividend, right? It has been increased, and they have no estimate of, if any, that they will decrease their dividend yield. And then they're also saying growing the payout at least 6% per year, and it's estimated to double by the year 2027. So to me, that's money back. Me investing, getting the dividends out of my investments, and putting that money back into the stock and continue growing the stock. Right now, the fundamentals of the company is great, so I am definitely investing in the stock. Look it up. MPLX. Maybe it'll be a stock that you would love to invest in. The next one, they always say save the best for last, is ticker symbol ARLP. As of Friday, it closed at $22.82. Again, I looked at this. I was looking at stocks, and I seen Fidelity rate this stock is very bullish, a 9.4 out of 10. So again, that brings me in that, man, let me dig a little deeper into this stock. Is it something I want to add to my portfolio? So the market cap is $2.9 billion. The total debt is $441 million. The cash, their cash, is about $278 million. And then their earnings per share has increased 2 cents over the last quarter. It was $1.23. It went up to $1.25. An increase. Me, I love to see increases on earnings per share. It is great, showing the company's continued growth. The fundamentals are still in line, and they're still moving forward. And then their PE ratio is 6.83 cents. Year over year revenue is up 48.96%. Year over year growth, again, from what it was from last year to this year, 122%. Right, up. Again, what are we looking at? What are the eye openers for me? My thing is the APR balance sheet sees a substantial improvement. Their balance sheet, it has seen a substantial improvement. And then the APR pill next year, cash distribution could reach $3. They're thinking from $1.25 to $3, which would be a dividend yield of 13%. So these are two value stocks that I am definitely investing in. Definitely looking to continue to grow my wealth, continually to look at stocks, value stocks, growth stocks, rail round your portfolio, ETFs, growth stocks, value stocks. You want to REITs. You want to make sure you create a full rail rounded portfolio. So that's what it is today. Those are the two stocks. My people, get into it. Invest in yourself. Some of y'all, listen, the first bill, what I teach everybody, the first bill you should pay is you. If you're not paying you as the first bill, you're doing yourself a disservice. This is your first bill, investing in yourself. Investing in yourself. Maybe those investments will bring the money where you can open up your business and continue to move forward. But you have to get in the mindset of investing in yourself. So this is Larry with the Best Credit Repair channel. Today we're talking about investing, and we're going to be bringing way more of these investment videos. I appreciate you. Please like, subscribe, share the videos, and we out.